What is up, traders? Austin Trades here, founder and owner of the Prop Shop YouTube. Coming at you with video number 2 today in the Building Your Trading Foundation playlist, which is generating repeatable edge. Again, to reiterate the mission of this channel, since we're just kicking this off, I hope to deliver no nonsense, straight to the point trading education that really provides consistent, repeatable results. I'm going to highlight that again, consistent, repeatable results. Is not to fill your head with a bunch of noise and a bunch of different trading strategies. The mission, really the overall vision for this channel has been for months to help traders learn how to think and apply more context and confidence to their trading. Ultimately, those skills, tuning out the noise, generating repeatable edge, creates consistent results. So really, without any further ado, the idea of generating repeatable edge here is going to get broken down into 3 specific verticals that I hope to deliver to you today. 1, the psychology behind pursuing repeatable edge and really what that looks like, what it looks like to wake up and embody that as a trader, to run a trading business and to pursue edge over noise, over dopamine on a daily basis. That's the psychological vertical. 2, to provide the technical vertical, to get you to understand, hey, how do I draw these zones? What does it mean to have a simple, repeatable edge? How can I tune out noise? And what are these zones? Why do they work? And what are the market mechanics behind that? And then 3rd, finally, I'm going to give you some real time. A trade I took yesterday, results on the same Tradeify account I highlighted in video number 1, just to provide some authority and context within this video that says, hey, these work. I actually traded them in an account that is both funded and the same account I talked about in video number 1. And as always, transparency is going to really be the ethos of what we're shooting for here. So without any further ado, let's get right into the video. Psychological vertical about, hey, what the heck is generating repeatable edge and how can I pursue that? How can I embody the pursuit of that as a high performer on a daily basis? First and foremost, I believe that the market itself is really this entropy environment where randomness takes over and really kind of hijacks our nervous system. If you've traded with me, if you've listened to me in the past, if you talk to me on a consistent basis today in the places that I'm at, if you know, you know, you'll understand that I talk about this idea of entropy a lot. The market is inherently random. And I want to identify zones where randomness is reduced and there is a much higher probability than not of X happening than Y, with less risk than potential reward. That is edge defined, in my humble opinion. Again, edge being a higher probability of X happening than Y with less risk than potential reward. And the variables of that, right? The functions to which degree you're pursuing probability in R, which is going to be that risk reward value, is completely up to you. But positively speaking, if we're winning 55% of the time with a, let's call it 55% R, 55% of the time when I win, they're bigger than my losers. And when I do lose, they are always smaller than those winners. That's going to produce consistent results. Now, repeatable edge can be defined with ICT concepts, EMAs, price action trading, supply and demand. But it isn't going to be consistent and repeatable if you're trying to apply each and every one of those things to your process and allowing those to infiltrate your mind, allowing those to infiltrate your nervous system, and just constantly questioning yourself, constantly, again, for a lot of you, over-learning, having a saturation of noise, which now isn't edge, because knowledge that's not applicable is actually probably detrimental to your trading experience. I like to pursue simple, repeatable, and scalable edge because I want to generate consistent results. And more than anything, I don't like allowing trading to consume my life. I love my significant other. I love our family. I love my life. I don't want to make this the be-all, end-all. I just want to do a great job at my damn job. How can I do that? By pursuing simple and repeatable edge, by tuning out noise, and by identifying zones where there's a much higher probability of X happening than Y with simply less risk than reward. I'm going to show you how to find those zones right now because I hope we're aligned within the context of, hey, maybe every day when you wake up moving forward, we can take a 1% step towards aligning ourselves psychologically and emotionally towards having the clarity, again, clarity and discipline, to be consistent. And that clarity looks like pursuing simple, repeatable, and consistent edge. What the heck are zones? How can we identify them? And let's get into vertical number 2, which is the technical context. Zones for me are going to be these horizontal imbalances in liquidity where if you understand auction market theory, you're going to recognize that the market is simply buyers and sellers. And as Mark Douglas so eloquently put, all price movement is a function of more conviction from buyers than sellers and vice versa. The order flow, the depth of market, the thing that's happening behind the candlesticks is buyers and sellers. So in each and every way, whether it's supply, a fair value gap, moving averages, they're all identifying areas effectively where X should happen more than Y based on buyers and sellers. So instead of adding all that noise, even though there's a lot of edge in some of it, I like to filter it down to exactly what the market is in and of itself, buyers and sellers. And these zones are telling me, in my opinion, or at least hoping that there's a higher probability there will be buyers than sellers here. And then I will observe the reaction when we get there. And a beautiful example of that is going to be from yesterday, November 11th. And there's another really good example of that from a technical perspective throughout this entire week trading. The zones that I'm personally looking for to take a bit of a top-down approach to analysis are going to be on the 15-minute time frame with no extended hours on. Even in futures trading, I believe that what I'm aiming for is a very binary approach to consistency. I want to be right and I want to be wrong, and that's it. And I really want to be right more often than not with more reward than risk. It's very simple. It's just not easy to do. And to simplify things, to tune out the noise, when is the most volume transacted in the NQ futures market? It's pretty obvious. It's in the New York session, especially typically within that first hour and a half to 3 hours, especially the opening range of the New York session. And so for me to find the areas where there's a higher probability of leftover orders, which is what these zones are to give context, buyers attempt to bid the market and defend 25,480, 25,450. This is what's happening behind the candles. And then we get enough buyers to overwhelm these sellers and we hold this candle pivot, 470. We close above it, and we see this shift in trend structure happening. Now, anybody that was absorbing these sellers here, this is the auction market context, is now going to have leftover orders. And for a lot of retail traders, they just don't understand this concept because they're entering, 5 to 10 contracts and that doesn't move the market. But the players that do take NQ from 480 up to 720 are absorbing liquidity at these levels and they're leaving behind a, let's call it metaphorical footprint. And there's gonna be a couple tools I personally use to find that. The first being price action, and let's keep it simple, base and reversal of a trend. Whenever you see that, there is typically going to be leftover orders there, which are going to be high probability and simple repeatable edge. It's a zone. And you see the same thing happen here. We have buyers off of a trend, absorption, reversal. So what happened when we gapped down and retested that? It was a beautiful flip in structure where former buyers became sellers, and this was a good opportunity to get out at break even, right? And so the same concept applies on Monday, November 10th. We had buyers off this low, and prices held this level all week. Now we're going into tomorrow, November 13th, which will be Thursday, and you can see how 1, 2, 3, maybe even 4 trading opportunities were present off this 500 psychological pivot / just this general, let's call it demand zone that is simple, repeatable, and scalable. If you want to add a little bit of context to this auction market theory idea, what are zones? Why do they work? Let's simplify it and remind you while you're listening. The market moves off of imbalances in liquidity. There's more buyers, there's more sellers, and the green on the proverbial roulette table is consolidation. We're looking for these quick periods of basing and consolidation, which are effectively trend reversals, and there's going to be leftover orders in the market based on auction market theory. That's been proven with very minimal backtesting, even though I've had hundreds of hours of videos on this in the past that are unfortunately no longer on YouTube. And again, we're going to add some context to this. So on the 5-minute time frame, we would look, me personally, on a rolling 1 to 3 day period. I want to see what happened the day prior. So Monday, November 10th, which would have been the only day I had to work with, headed into Tuesday, November 11th, we had a big buy into these 660s, 650s, and we saw a really aggressive reversal out of this. This would have been a zone intraday and at the time into the week before we traded above it and below it again. Now, if we want to add some context to this, session volume profile shows a lot of volume transacted at this area, right? Buyers attempted to push price higher, sellers absorbed the bid. We continued to see that absorption happening. Buyers were strong, they held higher lows. We made new high of day, but we saw some passive selling. And eventually active sellers came in and buyers stopped out of their positions, probably around the 600, 590 area. And we start to see that aggressive selling coming in after the fact. This is all in hindsight. These are basic price action concepts. However, we can use the session volume profile to recognize something that really does add context to our intraday trading thesis. And it's something like this. If all of these sellers from the prior session, Monday, continue to trade the next session and anybody buying this is underwater, then could this be a simple, repeatable, and high probability zone to take a trade off of, either a break and retest long or a reversal trade short? And I would argue, from my process, all the data that I have, that this is very simple, very repeatable, and very scalable. So what do we have headed into Tuesday? We have a very simple process. I have 3 zones headed into Tuesday. Prior session's low. We identified that already. We covered it with the mechanics of drawing a zone. We have the intraday high volume node, right? And this is going to be candle wick to candle body, candle wick to candle body. And then we would have had the prior session's high as well. Candle wick to candle body. Again, we saw that not necessarily reversal, but key level with the context being it is the weekly high, prior session's high on Monday, November 10th. So if we recognize the context, we understand the volume profile, we know supply and demand concepts, we're keeping things binary and simple. What does this mean? Set an alert at the highs and lows of these zones. If we break above them and retest them, it's probably a great long trade. There's edge there at least once we observe. Or if we test these zones and put in second sellers, second buyers, depending upon what zone we're trading off of, these could be great reversal trades, as we already highlighted on the 15-minute time frame. So headed into Tuesday, November 11th, I want to highlight a trade that I did take, and we're going to cover the actionable aspect of the trade with real fills on that same Tradeify account that I highlighted earlier. We came into the day on Tuesday, November 11th. You'll see this on the 15-minute time frame. I'll blow this up for you guys a little bit so this is a little bit easier to see. We came into the day on November 11th with a gap down, right? So we gapped into this zone, and you notice, what did we get out of the first reaction from this zone? We saw selling. So if you take all the concepts we just applied, right? Understanding what zones are, horizontal imbalances and liquidity, based off very basic market auction theory concepts, auction market theory concepts, excuse me. We are also looking for maybe some high volume transacted in those areas to provide confluence. And so if we test those zones and price is providing, let's call it a bearish pattern into a zone, that's a very actionable trade. So looking at this 5-minute time frame, we got a bearish pattern into a zone. We saw selling out of this, and we saw a really big retest into this level on the 5-minute time frame. And this is where I say that learning the basics of what happens behind the candles allows you to not become a victim of market candles. This is going to make a lot of sense in a second. This 5-minute candle to 90% of the world is probably bullish. I just see a re-offer of sellers, right? Until we get above this zone, that's my focus, because that's my binary and simple process. It's to be proactive, not so reactive. I'm not predicting, but I have a plan of, I believe there's a higher chance the market will simply move lower than higher. I have a zone, I have context. I'm going to wait for a pattern to trade into. And if you notice that on Tuesday, November 11th, we saw a re-offer on the 1-minute time frame into these highs. We started to break lower. We saw some selling here. And in my opinion, this provided an opportunity to risk high of day, to target low of day with very minimal risk, maximum reward, and a really strong thesis that I think was actionable at multiple different levels, right? We've covered it already, understanding that we're risking 20 points here to make 60 plus. That's 3-to-1. That's really, really good. That's a high quality thesis. Now, is the market going to provide an opportunity for me to actually take the trade or not? We're going to cover that right now, because I feel like we've covered vertical 1, the psychological introduction to generating repeatable edge. Vertical number 2, which is the technical aspect. What are zones? How do you draw them? Why do they work? And ultimately, they're pretty darn simple. Simple is the goal. Simple is repeatable, repeatable, scalable. Looking at Tradeify here, this is going to be my Lightning funded account, the same exact account I covered in the video number 1, ending in 2400. I am up $1,300 on this account. My winners are much bigger than my losers. Win rate staying right around that 60%, 70% around there, which is probably pretty normal in the context of all things. And my biggest trades are much bigger than my losers, and everything considered, I'm really holding my winners longer than my losers. Everything from a metric standpoint looks quality. Now, am I making the type of money that I'd love to make right now? Not necessarily, but there's the prop firm game that we're going to begin breaking down for you. If you can commit to 4, maybe 6 weeks at the most of playing the right games, the risk reward, the return on investment is so much better than cycling through combines, cycling through straight to funded accounts, and staying in the cyclical process of pursuing a hopeless goal. So I'm trying to prove in real time that we can take one account into a payout, we can use that payout to fund multiple accounts, and then we can scale up our trading business and do this times 5. Now all of a sudden 1,300 looks a lot better over the course of 5 to 8 trading days, right? The trade that I want to highlight for you guys, as we just covered on TradingView, is this lower time frame re-offer of these sellers with this context behind the 15-minute time frame, right? We know what we're looking for. We know why we're looking for it. What trade did I actually take? Let's prove these concepts work with some transparent results, and let's start getting the trading community to do that too. This trade I took November 11th. I entered at 7 a.m., 7:10 a.m. I took 3 MNQ. And that's been my risk settings within this account for the most part. I have a $600 daily loss on this right now. I have a 2R profit target, and I've been limiting myself to about 3 to 4 micros with higher volatility recently. I think the ATR on the NASDAQ, if I'm not mistaken, right now it's 20 points, but intraday today I do believe is 50, 60 points on the 5-minute time frame. So, losing about $300 on an individual trade here is what I'm looking for at the most, and that's dictating my trade management and my sizing in the short term. It should always be a reflection of that R, or the potential risk. The profits will be a reflection again of following your process. So November 11th, I entered at 7 a.m., 3 micros, detailed those risk settings for you guys. Wasn't in this trade for longer than about 10 minutes. But again, entered short, 617, 3 micros. I scaled quickly because for me personally, the game, which is not really the same as the long-term game that I'm playing in my personal funded account, or if you are in a live trading account, which we are going to cover transparently very soon here, which is going to be exciting stuff on a prop firm specifically. But for now, in this video, looking at this entry, looking to scale quickly and hold high R runners. That's my goal in these prop firm accounts at the beginning, is to compound, keep the trade volume low, scale quickly into profit, and then hold those runners for an average out R, right? So I got short at 617. I scaled at about 10 points, and then I scaled at 50 points, 60 points here, something along those lines with my quick math. 567 was my exit off the 617 entry. You can see this again, 7 a.m., 7:08 a.m., 8-minute trade. I entered at 25,617, and I got out of MNQ at 25,567. Short position there on November 11th. Again, let's highlight this trade real quick. I saw sellers come into the market at 617. This would have been my entry right here at 617. I did put a stop at high of day. That's a 30-point stop. And my target ultimately was this low area, right, 560, which was 2R. I was looking to risk 30 to make 60, and that was 2R for me. Again, in a live account, when you have the flexibility, and that's the prop game, so we're going to keep covering that in future videos, I'm simply looking to hold my full position for risk and reward. However, in the early stages when the deck is stacked against you, I'm looking to scale out quickly into these momentum moves and then hold the bigger picture runners, right? So 560 was the target. Where did we enter? 617. And again, quick scales because of game theory, but other than that, I got out of the trade at 567. That's exactly what I was looking for in that trade. That resulted in a $130 day, which a function psychologically of my drawdown. $600 in drawdown, right? I just made $130. It's a really high quality day from a percentage standpoint. Is this the type of money I want to make month over month? Absolutely not. Is my process going to allow for a simple, repeatable scaling? And are you now probably, hopefully, getting some insight into the power of keeping trading simple, focusing on your behavior, and pursuing repeatable edge? I hope these videos are extremely valuable. I hope you guys get a ton out of them. If you haven't already, please leave a comment for future videos and hit that like and subscribe button, because I'm hoping to drop more content as quickly as possible, as often as possible, because the markets have been awesome recently. Even today, November 12th, one trade, $125, continuing to do the things that I say I'm going to do. Was in a NASDAQ short for about 22 points, followed my plan, and we'll cover that with a quick trade review for a future video. So that's it today. I hope the Building Your Trading Foundation has been valuable. More videos to come. Have a great trading week. Peace.